Everyone sees OpenAI as this titan of the tech world, right? The undisputed king of the AI revolution. But here's the thing. When you actually peel back the layers of hype and look at the real numbers, a very different story starts to emerge. It's a story that feels familiar, a little too familiar actually, and it doesn't have a happy ending. All right, let's get into it.
All right, so first, we got to talk about the scale of this thing. Because OpenAI's rise wasn't just fast, it was like historically fast. The numbers here are just wild. Okay, look at this number. 1 million. What's that? It's the number of users ChatGPT got in just 5 days. I mean, let that sink in for a second. It took Netflix, 3.5 years to get there. Facebook took 10 months. ChatGPT did it in less than a week. Unbelievable.
And that was just kicking things off. Fast forward to today, and you're looking at 900 million active users every single week. To put that into perspective for you, it is the 4th most visited website on the entire planet. We're talking only behind Google, YouTube, and Facebook.
And look at this. This really paints the picture of their total market dominance. We're talking a valuation that just exploded 25 times over in 3 years. Something like 92% of Fortune 500 companies are using their stuff. They're the ones setting the prices that everyone else in the industry has to follow. And the pace, they're just launching new things constantly. They didn't just lead the AI market, In a lot of ways, they basically created it.
So you look at all that, and on the surface, OpenAI just seems totally unstoppable, right? Visionary leader, defining the future. But this whole story, charismatic founder, explosive growth, this mission to change the world, doesn't that ring a bell? We've definitely heard this one before. And that, right there, brings us to our cautionary tale. Because to really get what's going on with OpenAI, the potential problem they're facing, we have to talk about WeWork, the ghost of startups past.
Man, WeWork's growth it was off the charts. Absolutely insane. They were pitched as the future of work, and they just expanded at this breakneck pace, gobbling up office space in every big city you can think of. The revenue was doubling year after year. And investors? They couldn't throw money at them fast enough.
But here's the catch. Behind all that hype, behind that massive $47 billion valuation, there was a fatal flaw in the business model, a really big one that almost everyone was just ignoring. For every single dollar the company earned, it was burning through almost 2. Think about that. The more they grew, the more money they were losing. And then, in 2019, the music just stopped. Suddenly. WeWork filed to go public, which meant they had to open their books and show everyone the real numbers for the very first time. And oh boy, those numbers were terrifying. We're talking a nearly $2 billion loss every year, billions and billions in debt. The IPO? It completely collapsed. The valuation crashed, and by 2023, the company was filing for bankruptcy.
And this, right here, is the absolute key. No competitor swooped in and killed WeWork. WeWork's biggest enemy was itself. Its own business model was fundamentally broken.
Okay, so now let's bring it all back to OpenAI. Because when you strip away all the fancy AI hype and just look at the raw numbers, the pattern is eerily, almost alarmingly similar.
Just take a look at this. Like WeWork, as OpenAI's revenue climbs, its losses are climbing even faster. In 2023, they brought in $1.6 billion and lost $1.5 billion. Almost breaking even, right? But look at the projections. By 2025, revenue is supposed to hit $13 billion, but the losses could hit a staggering $9 billion. Growth isn't fixing the problem. It's making it worse. They're bleeding cash.
So to put it really simply, for every single dollar OpenAI earns right now, it's losing about $1.60. This is the WeWork paradox all over again, plain and simple. And listen, this isn't just me saying this. This is coming straight from industry insiders. A veteran venture capitalist, someone who's invested in literally thousands of tech companies, looked at these numbers and summed it up perfectly. They said, this is the WeWork story, but on steroids.
So the billion-dollar question, or I guess multi-billion-dollar question is, why, right? How can a company with 900 million users and these super expensive enterprise plans be losing so much money? Well, it all boils down to 3 fundamental flaws in the model.
Okay, flaw number 1 is the most basic one, but it's maybe the most important. Unlike old-school software, think Google Search, where adding another user costs practically nothing, AI is totally different. Every single time you or I ask ChatGPT a question, it costs OpenAI real money.
It costs some cash for computing power because every single one of those queries runs on these insanely expensive GPUs.
And this is where that cost becomes a massive problem. A staggering 95% of ChatGPT's 900 million weekly users are on the free plan. Let's do the math. That's 855 million people who aren't making them a dime. In fact, they're the opposite. They are a direct, massive cost center. Every question they ask literally costs the company money.
All right, flaw number 2 is a bit weirder. It's this idea of an AI circular economy. The whole industry is kind of operating like a closed loop, An echo chamber, where the same piles of cash just get passed around and around.
Here's a simple way to think about it, to see how this works. Microsoft pours money into OpenAI. OpenAI then turns around and uses that money to buy a ton of chips from NVIDIA. Then NVIDIA, flush with cash from selling all those chips, invests that money right back into the AI ecosystem, which includes, you guessed it, companies like OpenAI. See the loop? The money just goes in a circle. There's not a lot of new money from actual paying customers driving all this insane growth.
And that brings us to the final flaw. This one's a strategic trap. For startups like OpenAI, it's like they're playing a game where there are no good moves left on the board. A die-or-die situation.
They're facing this impossible choice. Option 1, a slow death. They can just focus on making the best AI models. But what happens then? Big tech, Google, Meta, Microsoft, they just copy the tech and bundle it for free into their products that already have billions of users, like Chrome or Instagram, and poof, the startup becomes irrelevant. Okay, so what's option 2? A fast death. They can try to build their own products, their own browser, their own social app, but that means going head-to-head with the giants, competing directly with them, and that means burning through billions of dollars in a war they have almost zero chance of winning.
So, where does that leave us? If the basic economics are just broken and the competitive landscape is a dead end, is there any way out of this paradox for OpenAI and all the other companies like it?
I mean, this sounds like something straight out of science fiction, but it really highlights the insane scale of the problem. When the basic math doesn't even seem to work on planet Earth, some people are seriously talking about solutions like building data centers in space, and that leaves us with this final kind of mind-bending question. What is the true sustainable cost of artificial intelligence? And in the end, who's actually going to pay the price?